my favorite guy, Tony De Niro, ready to talk Best Buy versus GameStop. Whoa. Hey, before we even get into this, Tony, okay? I don't know what your infatuation is with GameStop. It might be the same infatuation I have with you, but they don't need to compare to Best Buy. I just want to put that out there. I'm going to compare them. I'm going to do all the comparisons you don't do. But Best Buy's been around since 1984, 85 they've been public. As long as Costco has been public. I mean, they literally are that old, 40 years plus, and they're a great business model. We get that. But to compare the two, they're not the same. We're talking Best Buy, $40 to $60 billion in revenue compared to GameStop at 3. Like, it's ridiculous to have the comparison. But we'll do it. We'll do it for you. They have 40,000 employees. No, 75,000 employees. 95,000 employees. Something crazy like that. We'll go ahead and compare the two. This is fun.
Hey guys, good morning. August 28th, Thursday. Best Buy just reported their Q2 earnings. Hopefully.
Let me guess. You're going to look off to the screen a lot. You're also going to be doing edits and clips because you don't know anything about Best Buy. There's no way you know about the company called Best Buy. Are you really a study? Do you study retail?
You guys had a chance to listen in on that earnings call. The stock this morning trading down 2.5%.
Oh, did you listen to the earnings call? I want to know. Did you listen to the earnings call? You pulled it up like you listened to it. I gotta know. I'm gonna say no. You want me to prove it?
Percent at $73.57 at the time of filming this video. I thought it might be useful to take just a couple minutes and go through some of the Best Buy results. And if you're invested in GameStop, I think it is a useful comparison to look at what Best Buy is struggling with and what they are doing right, what is going well, and compare some of the metrics, some of the ratios from a fellow specialty retail competitor to GameStop, so that if you are one of those people struggling with the question that I hear said so often on social media, why won't they give value to GameStop with $9.5 billion of cash? There are answers in the financials to.
Isn't that an answer though? Why won't they give you value for cash knowing that you have that much cash? And you're like, okay, the market cap is equal to the cash. Isn't that kind of crazy though? I'm just maybe.
Help answer that question and give you some inner peace.
Thank you. You're giving me some inner peace, Tony. You're going to answer that question, the same question you answer every video.
Without any further ado, let's dig into the Best Buy Q2 results and do a little compare and contrast to GameStop as we wait for GameStop's earnings on September 9th.
Yay. Didn't you say it was the 10th in like a different video?
Before we dive into the details, the headlines this morning after Best Buy's earnings call, the headline saying Best Buy reports modest sales recovery, but says tariffs are complicating its turnaround. Best Buy topped Wall Street's fiscal second quarter revenue and earnings expectations, yet the consumer electronics retailer stuck by its full year forecast, which it had cut in May. The company is contending with slower housing turnover, higher tariffs, and selective spending by shoppers.
Hey, you know why housing matters to these guys? These guys sell appliances. Full-on ass appliances. TVs, washer, dryers, refrigerators. Oh, no. They're just like GameStop.
Looking at the summary sheet from Best Buy, a couple of key things to point out here. Revenue for the quarter, $9.43 billion. That is up 1.6% compared to the same quarter a year ago. On an annual basis, Best Buy brings in about $41.5 billion, and they've been on a bit of a decline since 2022. We can see that the bulk of that revenue is derived from the domestic segment and moving down into operating income. Their operating income as a percentage of revenue, 2.7%, a drop on a year-over-year basis. On an adjusted basis, though, it is very comparable to a year ago, 3.9% versus 4.1%. Diluted earnings per share, 87 cents, a significant drop from a year ago. Adjusted EPS, similar to a year ago, $1.28 versus $1.34. CEO Corey Berry notes that this comparable 1.6% year-over-year growth is the highest in 3 years and attributes the better than expected sales growth to a mix of new technology innovation, the company's focus on a seamless omni-channel customer experience, and strong vendor partnerships. And he goes on to say that they have a busy and exciting second half of the year ahead of them.
Did you just say, and he goes on to say? There's no way you listened to that earnings call. You're such a fake, dude. Oh, you're so fake. You realize Corey's a female. Like, you would know that if you study Best Buy. Like, you know, retail, we study the shit. You know, she's on the board of directors at Domino's. Like, literally all the people on the board of directors come from other retail companies. You got guys coming from Circuit City, dudes coming from Hudson. Come on, you know she's a female. You got to stop this, Tony. You got to stop being a fake, bro. You can't fake it till you make it. It's been 5 years. All right, back to the numbers, bro. God damn, Tony. How do you fuck this up, man? He said. He didn't say shit because he's not a he. Oh, man. Corey Berry? What's next? Chuck Berry? Oh, my God. Yeah, we're out here. We're rocking and rolling.
With tech innovation, new store experiences, and of course, the newly launched Best Buy Marketplace. And if you're not familiar with the Best Buy Marketplace, this was something announced very recently, a third-party digital platform that significantly expands Best Buy's products beyond electronics to include categories like automotive tech and licensed sports memorabilia. And the goal, obviously, with a third-party marketplace is to compete with the likes of Amazon and Walmart.
I just want to point out, it's so funny. We see products and brands that weren't available there before, including more tech-related accessories like custom video controllers. Anybody want to tell them? No. CandyCon controllers? And some non-tech items, including seasonal decor and sports collectibles. Anybody want to tell them? Anybody want to tell them? Always a little bit behind, huh?
Of Amazon and Walmart, boosting sales, increasing the product mix while allowing
Dude, we've been doing this shit for like a year now. PSA graded cards, get your cards graded. We sell all this shit. Margins. Well, we're not worried about tariffs. They're worried about tariffs. We sell our own products.
Customers to do returns in the Best Buy stores. It is very early. It obviously remains to be seen how successful this online marketplace will be for Best Buy. However, with the sluggish sales and the decline in overall revenues, this is a good attempt by the company to boost sales.
What are you talking about? You just showed me revenue increase of 1.6%. What are you talking about decline? What the hell are we talking about? Do you even know the number? You're blinded. I see. You have your eyes shut. You're reading it with your eyes shut. I got it.
Sales without having to load up their stores and their system with more inventory. Best Buy cut its sales outlook in May and said it expects full year revenue to range between $41.1 billion and $41.9 billion. That would be similar to Best Buy's annual revenue of $41.5 billion in the most recent fiscal year, but below the numbers it posted in the years leading up to and during the pandemic. Best Buy's domestic gross profit rate was 23.4% for the quarter. Compare that to GameStop, which in its most recent quarter had a gross margin of 34.5%. GameStop handily outperforming Best Buy in terms of gross margin. We'll get to operating margin and profit margins in just a minute. The next thing that I want to talk about, though, is the adjusted SG&A expenses over at Best Buy were 19.3% of revenue. And when you guys hear me talking to you about GameStop, I will continue to point out that the GameStop promoters like to focus on the whole number, just the number of SG&A, and GameStop's done a great job of driving down that number. But what I keep reminding you guys to do is exactly what Best Buy is doing here, what any sensible analyst would do. You look at SG&A as a percentage of revenue. 19.3% here for Best Buy for the quarter. Compare that to GameStop's SG&A as a percentage of net sales. They still have work to do. Even though they're driving the number down, they're still at, in the most recent quarter, 31%. This is...
So let's just sort this out. Let's sort out this bullshit right now. SG&A as a percentage of sales, so that we're clear. Back in the day, GameStop on his own little cheat sheet here, 2016, 2017 was at 26%, 25%, all the way down to 22% in a console cycle, right? Somewhere in that range in 2018. Good SG&A for GameStop. Here's the deal, okay? And you're going to see that number come down even more. Let's go right here. Hey, Tony, here's SG&A, okay? Here's store-related expenses, 131 in the U.S. alone. So 1/4, yeah, 24%, 25% ballparking number. I'm not really good at math, but maybe I am. So they're literally at 24%. So they're about 5% off of Best Buy. Yet Best Buy's been a turnaround, complete, done, topped out, maxed out for the last 40 years. GameStop just coming out of it a year and a half, resetting the number. But yes, they're at 24%. You just don't know it because GameStop hides charges in the SG&A. I already said that. That's what it says, other. So you have other, and it's right here. They go ahead and sent that out. Now, in addition to that, something like Canada was coming in at 13.3, just so you know, 1/3, 30%, 33% SG&A. That's gone. So you're going to have a way better percentage on SG&A coming in, just so that we're clear. People don't want to focus on this. People don't want to talk about this. I talk about it every day. I talk about this whole damn sheet every day, every line. You probably just watch the Cliff Notes. You're like, hey, I just want the easy stuff. I can't be learning about real shit. We already broke it down. GameStop's a very profitable company. You just don't see it yet. You're always waiting to hear the report before you actually see it. Hey, does anybody want to tell Tony that his Google profile has a picture? Those are his old face pics from Tony Frazzanetti. Didn't you get a legal name change to De Niro? And you're still using your old headshots from Frazzanetti acting? Oh, Fraz, you got to stop that.
This is where we get to dream a little bit. Like, what if GameStop does keep improving that SG&A as a percentage of net sales? That is money sitting there waiting to improve the bottom line of GameStop.
Oh, that's money right there. It's already there. It's coming, Tony. Get ready for it to come, Tony. Oh my God, can you imagine how much SG&A it costs? How much do you think it really costs to do power packs? I'm going to go with zero. Zero to hero.
And I am quite certain that management is continuing to focus on reduction of SG&A.
Imagine if I did a video just like right now, GameStop just and we're going to do it's fuck, bro. What are you getting for Christmas? Botox? This is the only dude I know in the forehead, please. Up here. Marantz, I've always wanted those wrinkles in you see how Marantz, you have a natural like wrinkle right here in between yours? No, Tony. That's an old injury when I got slapped in the face and it split my face open. I was bleeding like I was DMX on the front of his cover of his CD. I was out there just saying, let's do it. Yeah, that really happened. They put glue on it. Don't worry. Hey, Tone, what's going on with you, bro? Bro, I want to buy this guy a whole shave, like a whole razor, a whole shaver.
As a percentage of net sales. And if someone reporting on GameStop is not talking to you about SG&A as a percentage of net sales, that is a sign that they're dodging something that is important that normal people would look at because it...
No, that's not dodging something important. You know what that is? Think about it. Best Buy has a low SG&A percentage of sales because they sell more expensive products. We're talking about mass ballooned up revenue, but their COGS are low. Like, you're a damn idiot, dude. Their COGS are so, high, their margin's low. Just because SG&A is a smaller portion of the overall sales, you've got to factor in COGS. And when you go to COGS, cost of goods sold, that gross profit margin is all that matters. Don't tell me about SG&A. Now when your profit margin is only 16%, You better sell billions and billions and billions of dollars. But that's what we're dealing with. We're dealing with $9 billion. And if GameStop sold $9 billion of product, what do you think their SG&A would be? You're a fucking idiot, man. It's so crazy. I can't with you. You get to sit there and say that it's apples to apples, and it's not. It's not even close. GameStop sells like 1/10 of the revenue. So of course SG&A is going to be a bigger percent of the sale. But even then, it's only 25%. 30% on a good day. Gross profit makes it up. We're killing them by like 14%. Oh, of course. But if we sold more revenue and we had more profit, because we're already at 34.5, that's the margin on gross profit. It's ridiculous that they let you do this shit. Like, you're so smart. Like, you did something great here on a little. So sorry. Your Google spreadsheet shows you one thing. But if you look at the Google spreadsheet, smart guy, and you go ahead and look at the best years of GameStop, the best years of GameStop revenue were 9.2, 8.2, 8.6. Go ahead and look at the margins of SG&A according to your sales. It's going to be the smallest amount in the world. It's going to be nothing. And why is it going to be nothing? Because you sold so much and you didn't have to use any dollars to do it. That's all it means, man. I wish I could help you, but you can't help stupid. You can't help Captain Stupid over here. And you know what? You know what's even better than that, Mr. Stupid? That I'm willing to bet, Tony, and you can go ahead and look it up. I'm willing to bet that Q4 of every year, the percentage of SG&A is lower, like 20%, because it's Christmas and we sell more product. Here, let's go look at your sheet. Can I make it bigger? Yeah, it's right there in front of me. It's right there in front of me, Tony. Don't start with me. Look at this. You guys see? I don't know if you guys can see it. I'm gonna go ahead and I'm gonna get really close to it. It's gonna be grainy, but I'm gonna try my best. You see this, Tony? Look at this. Q4. I bet you Q4. Q4 right there. Look at SG&A. 20%. 20%, Tony. Oh my God. They got really close to Best Buy, didn't they? 20%. 22% right here. Last quarter. Q4. 22%. Oh my God. If they were just a little better, if people would talk to me about SG&A, then they would be telling you the truth. Yeah, you don't know what you're talking about, dude. You thought Corey Berry was a damn dude, and then you're out here trying to talk about these fundamentals like you know what you're talking about. Here, we'll keep watching the video. Let me waste a little bit more of my night.
It is news that they don't want you to have. I said that we would talk about margins, so let's do that real quick. A comparison between Best Buy and GameStop. You can see that GameStop has a higher gross margin, as we mentioned, than Best Buy, 30.55% versus 22.54%. However, operationally, GameStop is still challenged, only having an operating margin trailing 12 months of 1.58% versus the trailing 12 months operating margin at Best Buy of 4.1%.
Bro, are you spoon feeding this information? Like, is that what you want to do with your life? You just want to lie to people? 4% ops. GameStop's only at a 1.5 on trailing 12. Gross margin. GameStop's killing them. Of course they are. But profit margin, they're at 1.87 and we're at 5.67. Look at all, if they have a couple of more quarters, right? Oh, no. Let's go ahead and finish off your thought here.
14%. GameStop outperforming Best Buy in terms of profit margin and free cash flow margin, thanks to the interest that it is earning from that large amount of cash sitting.
The fuck are you talking about, bro? It's a fixed rate, 4%. Calm your ass down. Go ahead and take away the 4% from the free cash flow. What do you have now? What do you have now? Take away the 4%. What do you have now? So stupid, man. You couldn't get $9 billion out of Best Buy on an offering if you wanted to. You couldn't. No one's going to buy the top of something. They literally have maxed out their whole life. And keep talking. Sorry.
On the balance sheet. But I would also submit to you that Wall Street cares about operating efficiency, and Best Buy is handily outperforming GameStop at the moment.
Handily outperforming GameStop, you said. You want to know why nobody buys Best Buy? Like, it's just one of those stagnant stocks. It's like, I would tell you, no increases, no gains. You want to know why, Tony? Because you don't study retail, bro. Don't ever walk around here and talk about you study shit or you know shit. This is Best Buy. Yes, used to be 119 in 2021, down 40%, down to $72. P ratio of 12 to 17. It fluctuates. But whatever given day you want to go read it, it's a monster. But P ratio is so low because nobody wants to buy it. Do you want to know why no one wants to buy it when nobody believes the numbers you put in front of you? I'll show you. I'll show you. I gotta teach this guy, bro. I gotta teach this guy. They're so good. Let's go to the quarterly, Tony. I know you're doing trailing 12. Let's go to the quarterly and let's really explain what's happening with this company. This company here on gross profit margin, just so that we're clear, is flat over the last, I don't even know how many years. Okay? Then you go to ops margin and you're going to see that they're coming down, but they're flat again at 333, 444, whatever it may be. Profit margin, they went from being 3 down to 2. They're losing percentages, right? Free cash flow, they were negative, positive, whatever it may be. They fluctuate. Obviously, they can't compete with GameStop. We get that. When you go look at GameStop and you look at the same metrics, just so that we're clear, and we're going to quarterly because we are a turnaround company. We are doing our damn thing right now. You will see GameStop on a gross profit margin go from 23% up to 34%. It's 1,100 basis points. Nobody can even get close to that. This is a change of a company. This is a complete turnaround. You don't need to wait for it. And when you go to ops margin, just so we're clear, we were negative 5%. Now we're positive 6. Adjust another basis point, another whole percent, because there is adjusted in there. And if you don't think there's adjusted in there, go right on down to EBITDA right here margin at 4.14. It's there for you. It's adjusted for you. And you know what? I'm okay with it. I'm okay with it because I know that GameStop's going to beat everybody. I know that the 6% is massive. I know that when we go to Best Buy and we look at it and you go, oh, 3.4. Yeah. EBITDA's down here at 6. Guess what it tells you? They're flat. There's no increase here. This company is maxed out. There's no room for growth. GameStop has all the room in the world for growth, and it's going to happen, okay? The ops margin is going up because it's what I'm telling you. You are branding it wrong. You're waiting for it to happen. You're waiting to see the difference because right here to be negative 3% on profit margin, 1, 2, that's a flip of 5. Then we go up 10. Guess what? Even on profit right here, adjusted profit, we're at 10. We're at 10. Profit margin. Look at this company over here. They're 3, 3, 3, 2, 2, 2, 2, 2. It's hard to run a business at 0. But that's because they pay dividend, because they've been around for 40 years. They got to keep investors there. Free cash flow. Don't tell me it's just because, oh, these guys have some stacked cash. We were negative 13% on cash flow. Now look at this. It's a complete 40% turnaround. Don't tell me that it's whatever you want it to be. Because you know what, Tony D? You've been wrong about this investment called GameStop. You're out here making videos to say, well, they haven't proven themselves yet. And we'll talk about the next screen that you do.
But in terms of operating margin, so a little bit of work still to do at GameStop, and I know that management is...
There is no work to do. They're already doing it. They're already doing it. It's already here. Keep rolling with it. No one's even close to us. No one's close.
Actively working on this. In this analysis on your screen, I am using trailing 12-month margins. GameStop clearly in the most recent quarter is doing much better than what we see on trailing 12 months. And if that continues, that is good news. And it is reasonable to expect that that will change some.
Why would it not continue, Tony? Why would it take a quarter for you to figure it out? I got to see the smoke before I believe that fire. Right?
Sentiment for GameStop, but we need more than 1 quarter of really good results. We need to see a trend over a 12-month period.
I just showed you a trend. I showed you a trend from negative to positive. What more do you need? The turnaround's here.
And I hope that GameStop delivers that. A good data point here on September 9th. Looking at Best Buy's cash flow statement for the most recent quarter, operating cash flow is a positive $749 million, $175 million spent on CapEx, $65 million spent on repurchasing common stock. We like to see that. $201 million spent on issuance of dividends Best Buy returning value to shareholders through dividends, and the company pays about 95 cents per share in a dividend every single quarter. Moving over to the balance sheet for Best Buy, that gives them $1.456 billion in cash on the balance sheet. Looking at current assets, current liabilities, total assets, and total liabilities, that gives them a total shareholders equity of $2.7 billion and a positive working capital of $324 million.
Don't just skip it, Tony. Talk on it. Speak on it. Net cash versus the debt. $2.6 billion negative. We know what we see. To have only $2.7 billion, down from $3 billion just last year at the same time, they're down $400 million. And they can't get it back because according to profits, it's not there. But hey, you keep lying to people.
The balance sheet is in great shape. And you will notice that I am not talking about book value per share because literally nobody cares about book value.
There's literally like a chart that shows you that when the market is 5x book, and we're talking about the S&P 500, when those companies are 5x book, that's the average right now. It's the highest in the history of the stock market. 5.8, I believe, book. Do you know why they use that metric? Because that's what it really is. What is the company really? What do you mean no one values that? No one looks at that? They absolutely do. You know why, Tony? Because at the end of it all, you're going to be down to the book. You're going to be sucked out dry. You can spend all the cash you want. You can leverage it. Look at them. They're paying interest. They're paying shares. They're buying back shares, as you called it, right? They're buying them back. Now you understand. Now you understand why the stock price is so what? High? They got to buy it themselves?
Per share on any company, including GameStop, unless it is lower than the current market cap. This is another talking point that GameStop promoters and pumpers use to not talk about the things that actually matter.
To talk about value. Okay? The only thing that matters in this world, don't give me that shit, Tony. If you don't understand why, listen, dude, that is so stupid for you to say. Look at this. The reason why we talk book, because when you go to any, I don't care where you go, if you're going and you're looking up stats, you're literally going to go like this. Book per share is 1308. Book value, right? Price versus book. Literally metrics that you measure on the main sheet. It tells you 5.56. It is trading at 5 times book. Like every other stock. I mean, it happens, dude. I go to Disney. Disney's at 59.67. Disney's only a 1.97 times book. And why? Dividends, payout, cash, everything. Palantir, they're trading at 63 times book at normal. They're not overvalued. You're right. The PE ratios are not 525. You're right. People don't care. They don't care. Guys like you don't care because when you're buying things and you're finding out what value is, the whole thing about being a successful trader, just so that we're clear, a successful investor, it's all about what you buy. And not only what you buy, but what you paid for it. That's it. I don't care. You could buy a piece of shit, dude. You could buy the worst company in the world. What'd you pay for it? Great. You got good value? Good. Because it's price to value ratio. And right now, the price of GameStop and the value of it, infinite and a half. If that book value was all the way, what did you say? We only pay attention to book when it's below the price of the stock. Oh, so it's convenient for you. We only pay attention to it when it's negative. But when it's positive, hey, forget it. Now that it's past the break-even point, forget it. You don't get to have your cake and eat it too, Tony. Well, you might. I'm having fun with you, man. This is good. This is good. You're learning. I know you're learning tonight.
Like return on assets, return on equity, return on invested capital, and fair value calculations of a company's stock. What Wall Street wants to know is, what is your revenue? What is the revenue trend? Is it going up? Is it going down? What are the earnings?
Just so we're clear, GameStop's revenue trend is an increase of 9% per store. Just so we're clear, GameStop has an increase in revenue per store of $19,000 per store. Cool? They closed X amount of stores. They didn't have a drop-off. I can't wait for you to eat your words on this shit. I can't wait for it, man. Oh, God, we're 12 days away. Oh, babe, you're going to be dreaming about me.
What is the earnings trend? Are they going up? Are they going down? Is it flat? And are you returning value to shareholders through the payment of dividends? And then how are you utilizing any cash that you have?
What do you mean the payment of dividends? You mean the shit you're going to get taxed on? That's not how you return value to your shareholders. Increase the value of the stock. How do you get an increase? You do better. Better margins. Better business. That's it. Don't believe the bullshit this guy is giving out financial advice left and right. I'll remind everybody, this guy bought AMC and promoted Adam Aaron and the movie theaters to everybody. This dude bought a stock that's down 99.9%. This dude was debating whether or not to vote yes or no. This dude didn't go ahead and sell his Ape shares the minute they came out. This dude didn't sell his AMC shares when he was like, hey, Ape's coming out tomorrow. This dude promoted a potential Jeffrey Epstein buddy. This dude knows what he's not talking about. This dude.
Have on the balance sheet, ROA.
Just so we're clear, Tony Dinero stands for TD. This dude.
ROE, ROIC. There is just not going to be value given to cash sitting on a balance sheet that is not being properly employed. You can give some speculative value to it. Wall Street is not going to value cash.
I hope and pray, because you've repeated this, I don't even know how many times, like 40 times, bro. Like every video, you say the same shit. You pay attention to the same three things. Return on equity, return on assets, return on capital, invested capital. Guess what, dude? Nobody cares. Does that mean something? Oh my God, you guys haven't used your cash yet. Oh my God, we can't give you value for it. You will. You will. You will. And the soap, I call it the soap. You call it some of the parts. It's going to eat you alive, kid. Going to eat you alive. The minute, oh yeah, GameStop put $1 billion here. GameStop put $2 billion here. GameStop put $400 million here. GameStop, $140 million on net profit for quarter 2 of 2025. This dude, but I like the stock.
Cash on the balance sheet with any sort of price target that you might want to see on GameStop until that cash is deployed. And then maybe we see things change for GameStop. It is exciting to think about the potential of what GameStop could do with its massive hoard of cash. And I am 100% certain that management is looking for a good use of that cash. However, Wall Street also cares about things that are basics of.
Nah, bullshit, Tony. No. You're 100% certain. Hold on, Tony. Hold on. I'm 100% certain that they're going to do something good with that cash. They're looking to do something good with that cash. Yeah. Hello. McFly. Hello. Hey, are you serious right now? Do you have Geico? You have Geico Insurance, caveman? No, they want to do something bad with the cash. I'm 100% certain they want to spend that cash and do something bad with it. Oh, shit. And here I was thinking they were going to only do good.
Finance, things that any freshman in college would be taught in a finance class. These metrics that
any freshman in college would be taught. Hey, Tony, when you were a freshman in college, okay? We've all been freshmen in college. Maybe you weren't there. Maybe you missed the economics course or the accounting course. Maybe you missed a part. Because we can rewind it back about SG&A and percentage of sales. And no, gross profit margin. You don't want that one back? Are you okay? Are you okay, buddy? Do you want it back? I'll give it to you back. I'll let you try it again. Oh, God. Hey, by the way, Corey Berry. He's a good dude. This dude.
That I have on the screen, which no one covering GameStop wants to talk about. How GameStop is underperforming its competitors on.
How is it underperforming? It's not performing at all. GameStop has not deployed any cash. So there will be no return on equity. There will be no return on assets. None. There'll be no return on capital except for the what? The 4%. So take it away from return on equity. What do we got? 4%. It's okay. What are you mad about? It's like, man, we can't give them a rating yet. They haven't spent any money yet. Okay, then chill. Calm your hairy nips.
ROA.
I know they're hairy, bro. I gotta be. I saw you with your shirt off in that one movie.
ROIC and ROE and how it is being negatively impacted by that cash on GameStop's balance sheet sitting unused. ROA is significantly impacted by idle cash not being employed to generate new streams of revenue. ROIC is also negatively impacted by cash sitting idle because...
Hey, isn't that awesome, guys? GameStop has an increase in profit margins. Think about that. I just want everybody to think about this for a second. GameStop has an increase on profit margins. GameStop has more profit than they've ever had. They're making money hand over fist compared to everything else around them. Even compared to Bed and Beyond over here, or Best Buy, whatever the hell, they're doing so well. Okay? Just saying. And they haven't used anything? These guys are using everything. Look at all this money they're making. Oh, they must be killing it, bro. I must have missed something. What's their profit margin again? What do they got going on? Free cash flow, you said? They're sitting on $1 billion, right? Okay. Okay, you got me. You got me this time. Oh, hey, you really got me with this video, man. You got me watching this shit.
The very definition of the formula is return on invested capital.
No
Cash
shit.
sitting unused is not invested capital, and so you're going to have a pathetically low ROIC until that cash is put to use. This does not mean that GameStop sucks, but if you're wondering why the price is not doing what you want it to, you must understand how the finance bros are looking at things that actually matter. And what actually matters is usually not what anybody on GameStop YouTube channels is talking about. They talk about things.
Bro, you better start saying my fucking name, bro. Because you're going to have to say it soon, Tony. Hey, Tony, in like 12 days, you're going to have to say it. You're going to have to go pay for it. You're going to have to do everything for it, bro. You. No one's going to remember you. Nope. You're just a dude somebody's getting ready to put into a home. No one's going to remember you.
Things that is convenient to them, and they ignore things that actually matter because the numbers compared to competitors just don't look good, and they don't want you to have these facts. Here on my channel, as we cover stocks like GameStop and Best Buy, I want you to...
You do not cover Best Buy, bro. You better cover your eyes and your mouth when you're talking to me. You shut your mouth when you're talking to me.
Understand how Wall Street is looking at the play. You can have a different way of looking at it. That is totally fine. But you can't say that you don't understand the valuation of GameStop while you're ignoring things that...
I don't understand it. I don't. You know what? Let's finish this off. I don't understand it, Tony, okay? And I'll explain at the end.
Actually matter, because like it or not, these things matter. I'm excited about GameStop's potential to put that cash to use, and I will be long on a speculative bet that they do announce something at some...
I'm tired of you saying you're long on a speculative bet. I want to see the position, Tony. Put your money where your mouth is. I don't know how many times I got to tell you this. You never show a position. You've never shown a position in any video you've ever done. Live stream, video, you never pull up shit, kid. It's all just word salad. My shit's posted everywhere. I show my everything. Yeah, go ahead, do something, bro. I'm long. I'm bullish. Well, you know, you are bullish. Bullish. BS. Bullish. Bullshit.
Point, a good use of that cash, and people get excited and the price goes up. I can't promise you that's going to happen, but that is the speculative bet that I have. As we wrap up this video talking about Best Buy's Q2, let's contemplate for a second their forward PE ratio based on communication from management about expected earnings over the next 12 months.
So good.
The forward PE ratio is 11.13. That is pretty low, and what I would say is fair valued. And when we compare that to something like a GameStop, a forward PE ratio of 36, you can see how some people might consider, when you're comparing direct competitors in the specialty retail sector, some people might still consider GameStop overvalued. And it is overvalued when you're looking at its performance that we know of to date. Maybe we get some exciting new updates on September 9th. What we are seeing here with the forward PE ratio with GameStop is a speculation that things are going to get better, or some news is going to come out that cash was properly deployed and earnings is going to go up and we can recalculate the valuation of GameStop. I certainly hope that is the case. And I know that management is not ignoring this overvaluation, even though people on YouTube appear to be. Management is selling shares, selling bonds when the price is overvalued, and they are not buying shares back. They understand fair value. They understand now is not the time to buy shares back. Maybe if it was trading back around $10 again, I would say, hey, Ryan Cohen, buy some shares back. But we're not there. We're at $22. We got some positive speculation going on here, and I am going to cross my fingers and hope that on September 9th, when we get the news, that it is news that everybody wants to hear.
Okay, his video's over. What in the hell are you talking about that management even knows this price is overpriced or overvalued or the stock's undervalued? Are you fucking kidding me, bro? You gotta be kidding, right? Hold on, Tony. I've got board of directors buying shares every year. Millions and millions of dollars. Their own money. Personal, in the pocket. They don't even get paid from GameStop. And they're buying the damn company at this price. What are you talking about? This is crazy talk. Are Best Buy insiders buying right now? They're getting paid by that same said car. Are they buying them back? No, they're buying them back with shareholder equity. Remember that little amount that you said was nothing, that little book value? They're buying back shares. They're pumping their own shit. Maybe it's a terrible company. Or maybe as a small float. Just all the little things, you know? I mean, I did look at it. They did buy back over 60 million shares over the last 5 years. Yeah, GameStop, yeah, you know, offering shares to people because people love to lose money. There's people out here that just love to lose money. Everybody that bought 145 million shares on an offering when GameStop was $10 a share, and then it ran up and GameStop sold, and everybody bought on average of $28. They just wanted to. GameStop just raised $4 billion like nothing, then did a bond offering and found the same price points of around $29. Conversion, boom, here we go. This is a bad time to buy. You mean to tell me, Tony, just so that we're clear, Ryan Cohen had the opportunity to raise billions and billions of dollars for the company, and because he didn't buy back shares at this price, which wouldn't have had a material effect on the price anyway, he raised all the cash in the world when it's time to raise cash now. Because when markets correct or when you're ready to deploy capital, other investors won't be ready. When it's time to buy things, people aren't going to be ready. If the market were to come crashing down tomorrow and pull GameStop with it, it's time to buy things. It's time to buy things. So if it got down really low and we sold all this money, all this equity, we did everything at $30 a share, and now it's at 15, we're going to get 2 for 1. Is that it? Is that what we're doing? I mean, it doesn't matter. You couldn't do it to us if you wanted to. Do you know how suicidal it is for Wall Street? Do you know what we're doing? We're playing every angle. We've got the Bitcoin angle covered. We've got PSA partnership covered. We've got margins covered. We got profits covered. And then we've got you covered, Tony. We got you covered looking like a silly little rabbit. Let me tell you something, little rabbit. Do you see this shit right here? The shit that nobody talks about? You want to talk about a stock? You want to talk about the performance? How about the fact that this thing's going sideways for 6 years? You know why? Because we know why. We know what the want is. We know what the need is. We know what popularity is. That's why you bought in, Tony. You bought in on this failed company with no turnaround. You bought in at $21 allegedly for X amount of dollars because, hey, the margins weren't there, or the SG&A percentage wasn't there, or the return on investment capital wasn't there, return on assets and equities weren't there. All those margins nobody wants to talk about. But yet you still bought it, right? Maybe to the tune of what? $500? Who knows what you got under the table? But I wish you luck, bro. I didn't know this video was going to be 45 minutes. I'm going to see you millionaires tomorrow. I had fun tonight. Tony, don't forget about me. I'll sing you a bedtime story when it's time to hang it up. When you make the video, go, I'm out of here. I'm going to quit YouTube. Because there's no way you're making money off this shit. No one's watching. I just saw that shit 4 hours ago. 200 views. Get the fuck out of here, Tony D. I'll see you around. Peace.